So that's a word coming in from Orient Paper, but it's time we get started on your stocks and welcome our two experts for the afternoon. Mayuresh Joshi of Angel Broking joins in to answer all your stock queries, and Nikhil Kothari of Edica Wealth Management is our personal finance expert. Gentlemen, good afternoon. Thanks very much for joining in. Our first caller is with us already. Ashwini Borkar calls in from Delhi. Hi Ashwini, what's your question?
Hi. This is mostly from my father's side because my father had got shares for me. Those were Bata shares, around 200 shares at the rate of 200, and he had got it around 4.5 years to 5 years back. So I just wanted to know if I should retain them or I should just sell them and take the profit.
Okay, Mayuresh, her query is on Bata. The stock is on a YTD basis. It's lost about 6% and, in the last 1 year, over 1 year, it's more or less remained range bound. Even the earnings which are due today are expected to be just about stable. Nothing spectacular. So what does a person who's making big gains in Bata do at this point?
Sumer, I think clearly the issues that were plaguing Bata for the last 2 quarters, to say the least, were implementation in its SAP program and the supply chain issues that the company had faced. Clearly, I think if you go beyond a couple of years' time horizon, even from the current juncture, our take is that the employee cost as a percentage of sales should gradually start coming down. The rent cost as a percentage of sales should stabilize between that 14.5% to 15.5%. And clearly, I think if you look at the different business components that Bata has got, the greater value contributors will come in from the women's segment and the other apparel segment, which will come through in terms of leather accessories, whether it's belts or leather shoes. So in that sense itself, our take is that there would be significant expansion of margins as the management is expecting. You had seen margin compression happen over the past few quarters, but again I think the margins should stabilize between that 15-16% mark. The free cash flows should show an increasing trend, and clearly I think if you look at the kind of store addition that Bata is doing and the management focus again in developing its franchising network, the e-commerce initiative, going into tier 2, tier 3 cities, it already has a presence around 1,400-1,500 odd stores across different formats. So our take is that at 28-29 times at 517, it's reasonably priced at the current juncture, but the buying price is simply too lucrative. So I think simply hold on to the stock, hold it on for the next 2 to 3 years. I think you will still make good returns from the current levels.
Right, Mayuresh, that point's well taken then, but let's pull up the Nifty at this point of time. In fact, it's taken a bit of a knock in the last few minutes. Just pull up the Nifty. That one's lost close to around 10 to around 15 points, and that's happened very, very quickly. The Bank Nifty as well should come up for you. That as well has moved to the low point of the day, so you need to pull up ICICI Bank. That's always the big boy that moves the Bank Nifty as well as the Nifty around. Take a look at it. Taken a sharp knock in the last few minutes. It's moved to the low point of the day, and that's why, in fact, the Nifty as well as the Bank Nifty have given up a goodish bit from the highs of the day. Pull up Bank of Baroda as well as PNB. Both those two as well have taken a cut of around 0.5% to around 0.6% just in the last 10 to around 15 minutes. Both those two stocks, in fact, struggling as we speak. And big boy Bosch as well comes up for you. That was holding with a gain of around 1.5% just around 5 to around 10 minutes ago. Bosch as well has lost a goodish bit from the high point of the day. So there is some volatility that's creeping into, and I think it's primarily to do with what ICICI Bank has made the Nifty as well as the Bank Nifty do. Coal India as well. That's another stock that was down close to around 1%, and currently, in fact, it's down close to around 1.5% as we speak. So pull up Coal India as well. That as well is not looking too good. But let's get to our next query then. We have Deepa Jain, who writes to us from New Delhi. She says that she wants to start investing in mutual funds. She wants to invest around 5,000 rupees per month. Her time horizon is close to around 5 years. But Nikhil, let's come across to you. How can you help Deepa out?
Yeah, so first I'll say, Deepa, that whenever you're investing, you should invest with a goal in mind, because this helps you to bring more dedication and commitment towards your investments. Since it's a 5-year time frame, so I'll say that she should invest in slightly a risky proposition as compared to pure safe products. So considering a 5-year time frame, she can look at investing in a balanced type of fund. The balanced fund invests around 65% in equities and 35% in debt. So this will give him the exposure to both the sides, equities as well as in debt. The good part of it is that if you invest for more than 1 year, all your return which you make from this investment will be tax-free in our hands. in the balanced fund, she can expect around 11-12% return tax-free over the next 5-year time frame. She can look at couple of funds. She can look at SDFC Balance Fund, or she can look at L&T Prudence Fund. Both these funds are a good performing balance fund. They have given in last 5 years, SDFC has given around 16% year-on-year return, and in last 3 years, 20 to 21% year-on-year return. So I'll say that stick to one of the fund and stay invested for 5 years and have a goal in mind.
All right, fair enough. On that note, we need to take a very quick break. Our two experts, Nikhil and Mayuresh, are going to stay on with us, and we'll come back and answer some more of your queries. So do stay tuned to your stocks.
CNBC TV 18, celebrating 15 years of leadership.
Welcome back to your stocks on CNBC TV 18. We have some numbers that are flashing for you on the screen. Maharashtra seamless. In fact, the top line is taking a bit of a knock. It's come in at a down closer around 11%. They've delivered an operational loss as well, so that number as well should come up for you. It's an EBITDA loss if I saw that number right. And in fact, their income as well, that's their other income, that as well has come in low, and that's what's led them to deliver this time around a net loss of close to around 8 crores. That compares with the reading of around 22 crores. That's it for up for you on the screen. EBITDA loss is what they've delivered in comparison to a profit, and that's where that stock is selling off. It's down close to around 9% as we speak at the low point of the day. But let's pull up a few stocks, I think, from the mid-cap space itself, because a few of those stocks are moving around. So Apollo Tyres was flying away yesterday. Just take a look at that stock. It's coming for some profit booking. MRF as well should come up for you. Just take a look at both these two stocks. They were big movers yesterday. They were moving on high volumes. We did see a fair bit of action in the derivatives market as well. In fact, Anuj was pointing out this morning that there was no delivery-based buying on MRF. Take a look at that stock. In fact, it's been very, very volatile in today's trading session. We'll have to watch out for the delivery data yet again. And OBC as well, one of those banking stocks, seems to have sold off in the last few minutes, taking Canara Bank as well down with it. So a couple of those banking stocks as well selling off. Canara Bank as well should be up for you on the screen. But our next query is already in. So we have Shiva Kumar, who calls us from Andhra Pradesh. He has a personal finance query. Hi, Mr. Kumar.
Hi, sir.
Yes, sir. Aapka sawal kya hai? What's your question?
Sir, I want to know about what is the meaning of closed-end and open-end mutual funds, sir. The verification about it.
All right. Nikhil, easy one coming your way this afternoon. Could you go ahead and answer that question?
Yeah, so open-ended, closed-ended funds are two types of structure in mutual funds. So what is open-ended fund? Open-ended fund basically means that you can invest at any point of time, and whenever you want to redeem it, you can redeem at any point of time. What is closed-ended fund? Closed-ended funds open for a particular time frame. So they will open, you can only subscribe during a certain time frame, and after they are closed for a particular time frame. So it can be 3 months, it can be 3 years. So in all the closed-ended fund, in terms of liquidity, you can only redeem when the scheme is again reopened for redemption. So if your money is for 3 in a closed-ended fund, the money is locked in for 3 years. However, they give you option to that all this closed-ended fund are mandatory listed in stock market, stock exchanges, and you can redeem on stock exchanges. But the problem is that there is hardly any liquidity. So you don't get any liquidity option in closed-ended funds. In case of closed-ended fund, they are mostly the popular one are FMPs, or called fixed maturity plans. So what these fixed maturity plans do is that they invest in debt securities, and they are pitched again similar to like a fixed deposit. So you can invest for 3 years, and the benefit in FMPs is that if you redeem after 3 years, you get preferential tax treatment as compared to fixed deposits. In case of equity, open-ended and closed-ended fund, again the same structure, like the same thing, but in terms of mandate, in terms of benefit, there's not too many benefit of investing in closed-ended equity funds, because historically we have seen that there's not too much of difference in terms of open-ended fund and closed-ended fund, and closed-ended fund have not performed better than open-ended fund. So as a rule, I'll say that if you're investing in a equity fund, go with open-ended fund as compared to closed-ended funds.
All right.
And they give you better liquidity option.
All right, thanks very much for that. Also, you might want to look at Manali Petro. The numbers have just come out. Remember, this is a stock that on an intraday has lost about 10% from the highs of the session, 10, 11 odd percent. But results seemingly okay. Total income has gone up about 4.5%, and net profit too has more than doubled this time around. But let's take a break on that note. We'll come back and continue answering all your stock and personal finance queries. Stay tuned.
CNBC TV 18, celebrating 15 years of leadership.
Welcome back. Nifty holding with gains of close to around 60 points as we speak. Asian Paints should come up for your stock, is moving quite well. You pull up something like a Z Entertainment as well. Stock in fact has moved to the high point of the day, and Sun Pharma as well has moved into the green. So all those three stocks in fact are doing quite well. But if you take a look at it, the mid-cap space as well is buzzing around. United Spirits, cheers for the day. Just take a look at it. It's higher by close to around 4%, moving very, very well. It spiked up in fact in the last 20 minutes. Sun TV as well has moved into the green at the start of the show. In fact, it was trading in the red, so that stock as well has done a bit of a rebound. And Cadila Health, finally, that stock as well seems to have spiked up in the last few minutes, holding higher with a gain of around 4% as we speak. But let's get back to answering your queries. We have Samir who calls us from Pune. He has investments in Tata Chemicals. Hi, Samir.
Hello.
Hi, Samir. Good afternoon. How can we help you?
Good afternoon, sir. I have the shares of Tata Chemical at the rate of 257.
All right.
And I bought 300 recently before the ex-dividend. Should I keep for a long term or should I sell that?
So your total quantity that you have is 250?
560.
560. Wow, Samir, you're going to be a very, very happy man. You're making good money, and you're a long-term investor, I would believe.
Yes.
All right. Congratulations, first of all. But let's get a check from Mayuresh. Mayuresh, look at this investor. He's so happy. He's making big money, and in fact, he's sitting on big gains. He's a long-term investor. Should he hang in there?
Absolutely, Nigel. You should hold on looking at the buying price again. And clearly, I think the management commentary has been quite resilient, specifically towards their agri and consumer business. They're expecting the revenues to actually go fourfold from the current 1,000 crores that they make. And the kind of debt that they have on their books of close to 5,600, 5,700 odd crores is more to do with the kind of subsidy payouts not coming through on the urea part. So chemicals, fertilizers, clearly giving a little bit of a slowdown when it comes to the overall balance sheet growth. But again, the management consciously deciding to focus on the other part of their businesses. So I think salts, lentils, pulses is something that they'll ideally like to grow their business from. And again, I think the distribution network is something they're planning in a big way over the next few years. So I think looking at the buying price, definitely hold on to the stock. I think the management is able to do what it is planning. I think the stock can go higher levels from the current levels.
All right, and finally, we have a query coming in from Hitesh Kumar, who writes to us from New Delhi. He says he can invest about 2,000 rupees per month in equity mutual funds for a time horizon of about 3 years. He says he's 28 years old, and apart from that, we don't have any more details on what he intends to do with this money in 3 years and why only 3 years. So, Nikhil, it's pretty much a blank check for you. Where do you think he could put this money to use?
Yeah, first of all, considering the 3-year time frame, 3 years not a good time frame for equity mutual funds. So I'll say that either he should increase the time frame, or instead of equity mutual fund, he can look at balanced mutual fund, because they will have a mix of debt and equity, so which will give him more stability as compared to pure equity fund. Again, in balanced fund, he can, since he is looking at 2,000 rupees SIP, he can look at either HDFC balanced fund or L&T Prudence fund. Both these funds are performing very good, and the good part is that all this money after 1 year will be tax free in his hands, and he can expect around 11 to 12% post-tax return in this fund. But what I'll say, advise him is that since he's 28, he should look from purely long-term perspective in terms of investing, and he should not look SIP only for 3 years, and he should plan for his retirement and all other future goals.
Yeah, that's true. All right, on that note, Nikhil, Mayuresh, thanks very much for joining in and for doing the honors today, for answering all the queries sent in by our viewers. We need to wrap up on your stocks, but do stay tuned. Closing bell is up next.
CNBC TV 18, celebrating 15 years of leadership.